Hey guys, we're back. We're LTC Tree. I'm Derek Wilkins. I'm with, again, my cousin Drew Nichols. He's out in California. Drew, what are we talking about today?
We are talking about something that I run into more and more often, and that is how to use your HSA to pay for long term care insurance. And we're actually going to reveal one of the very rare tax loopholes where you could actually never pay any taxes on that money in your HSA, which is rare. Those loopholes are so hard to find in the tax code these days.
Well, I'm intrigued. What do you got?
Well, we've known forever you can use HSA money in a lot of cases to pay for long term care insurance policies. The rules around this can be tricky. And so the first caveat you're going to get from any financial advisor or any financial person is verify all of this with your CPA for your exact situation before you go any further into a product. We're just going to talk about, in general, some strategies and things, how they work. But I had a case this week that I wanted to bring up. A gentleman, he actually found us on YouTube. Talked to him this week. He had $132,000 in an HSA account, which first of all, I said, you must be a really healthy guy because you've been contributing to that HSA and obviously haven't had to spend all the money. Derek, do you run into people with HSAs that big very often?
I do run into them. It's usually not that I've never seen one that high. It's usually, I'd say, 70 to 90,000 range. That's gonna be the higher end. But yeah, 130 some odd $1,000. That's a lot. Good
Well,
for
and
him.
and you know, even if you have nothing in your HSA, you can fund your HSA and then immediately use that money to pay your long-term care premium. So this really works well for people a little bit later in life because there's basically a step up as you get older in how much you can pay of long-term care premiums from an HSA, and it maxes out currently just a little bit over $4,800 a year. And that's enough to buy a pretty nice traditional long-term care plan per person, by the way. So for a couple, we're talking $9,600. But you can also use them for some of the hybrid plans because a lot of the companies break down what portion of the premium on a 10 pay hybrid goes to long-term care and what portion goes to life insurance. And I'll give you a real world example with this gentleman and his wife. It was about a $19,000 premium for them to get a joint plan for 10 years. So they're going to pay over 10 years $190,000. They can max out $9,600 a year, which is not even enough to cover that full long term care premium, but they can max out that HSA at $9,600. So they'll have, if they did it every single year, they'd have $96,000 out of that HSA into the hybrid plan. They would pay the difference with, after tax dollars. But where this gets great is if they ever use it for long-term care, they're going to have, by the time they hit average claim age, over $1 million in long-term care coverage. And if they never need long-term care, a tax-free death benefit of $180,000 goes back to their beneficiary. So, the numbers are going to be different for every couple and every situation. But the point is, if you're willing to use your HSA for a portion of a hybrid plan, you can get a big multiplier on that money if you ever need care, or if you don't through the life insurance.
Yeah, Drew, for those people who are just say they're new to finances and they don't really understand like what the benefit of an HSA is, why is an HSA? What is it? How does it benefit them? How does it put more money in their pocket?
Yeah, so the HSA is at this point, ancient history. I think it came out under George W. Bush under one of the Deficit Reduction Acts. Basically, it's a health savings account that you own. I've got a credit card, I've got a bank account, and I can put pre-tax dollars into that policy, or not that policy, into that bank account. Then I can use it for healthcare expenses, which guess what? Certain qualified long-term care policies are considered health expenses in most cases. Again, verify this with your CPA. But we have clients right now that are using their HSA every single year to pay their premiums. So they're able to pay with pre-tax dollars. Now, one other cool thing about HSAs is you can let them grow in the market and other mutual funds and things like that. You don't have to use them for healthcare expenses. You can pay out of pocket, keep a ledger, and then reimburse yourself later after it grew tax-free in that account. So there's all kinds of probably other videos on YouTube you could watch about that side of things. We're trying to help people who have accumulated these larger HSAs use them to get as much of a tax benefit as they possibly can, because that's why they did it for all these years.
Yeah, so if I'm doing the math correct in that example, so their premium's 20 grand and they have about roughly $10,000 they can use per year. So if they're in a 20% tax bracket, as opposed to having to pay the IRS that 20% on $10,000, that's saving them about $2,000 per year. Is that right? Am I doing the math right?
Yeah, if that would be true if they were funding it. The good thing for them is they
Yeah.
funded it in years past, but the problem they have now in retirement is they have to figure out how to get it out of the HSA, which can be a taxable event if you're not using it for healthcare expenses. So this is a
Yeah.
great way to take money out of your HSA legally, ethically. I think it's a great idea, without having to pay the taxes on it, because it's going to be hard to empty $132,000 out of an HSA through healthcare expenses. I mean, God forbid you need to spend that much on healthcare expenses in retirement out of your HSA.
Yeah, I know. And then how many Band-Aids and vitamins can you actually buy if you have good health? I mean, you can spend it on some of those types of drugstore things, medications, but like it'd be really impossible, almost impossible to spend that amount of money. So that's a very sophisticated way. I'm glad we're doing the video on this because I think there's a lot of people out there with those HSA accounts just sitting there. And like you said, they want to get the money out. And what a better way to protect your whole portfolio is using a portion of that to get a long-term care insurance policy or a hybrid long-term care insurance policy.
Yeah, and the way I described it to this client is I said, think of this like, again, it's going to be a little bit over $1 million by average claim age. It's $1 million that you've got that you can spend only on long-term care. Unfortunately, it's not cash. But what that does is, to our point here at LTC Tree, the reason why we like doing what we do, the drudgery of insurance, is it frees him up $1 million that he doesn't have to earmark for long-term care that he can go have fun with.
Yeah, I know the what ifs in life, especially as you age, stuff happens. It's modern medicine is
Yep.
keeping people alive longer, but often the last few years of their life, it's riddled with doctor visits, surgeries, and you might not be as mobile. You might not be as sharp mentally, but you're still hanging in there. So if you have a long-term care policy, if something happens, what if something happens? What if I fall and break my hip? What if I get Alzheimer's? That's taken care of, so you can kind of don't have to worry about like, allocating your nest egg, your stocks, bonds for the what ifs. Like you said, it frees you up to basically enjoy your retirement, have fun, because if something happens, it's going to come out of the insurance company's pocket, not your investments.
Exactly. And just to put a cap on this policy, since I've talked about it so much, that $1 million is a joint plan. One of our hybrid companies, we've made videos on them before. They will do a joint policy. And so he and his wife have this $1 million that they can use in the future. It's a lower number today. If you like, I think it's about $500,000 today. They have this account that either of them can use for care. So he's not having to guess whether he's going to need it or she's going to need it. It's like an umbrella policy. So just some cool ways. We're trying to help people think outside the box. I mean, thank goodness currently the market's done so well. A lot of people have investments in their HSAs and their 401ks and their stock accounts, and we're just helping people take a little bit of chips off the table to create some security for their future.
Yeah. Well, I think it probably puts a bow on tonight's discussion. That was a great video. I think hopefully people get some good real world use out of it and the HSAs. So we're LTC Tree. We're a broker. We work with every single long-term care plan out there. And if you'd like to learn more, call us 1-800-800-6139. Go to our website, ltctree.com, and see if you qualify. Now, to get long-term care insurance, you do have to go through medical underwriting, but we've been doing this for 26 years, so very versed on giving you a very accurate prediction if your health is good enough to get the insurance. So if you're curious, want to learn more, just want to talk to us, run some ideas by us, feel free to fill out the form on our website or call us.
Yeah. So, Derek, thanks for chatting with me about this topic tonight. We'll do it again soon.
All right, see you guys.
Bye bye.